What's up, everyone? Welcome. Busy weekend. Thanks for dropping in here. Lots going on already, so I just want to get right into it. Hope everyone had a solid weekend. Lots going on in the World Cup. Fun stuff there. Get into the comments. I'm going to be talking about like a few different subjects, but if you want me to go do some deep dives on some different subjects, get into the comments. Tell me what you want me to deep dive on. Happy to go into some deep dives. Biggest news right now that I'm watching is this Robinhood chain has just gotten all the hype right now. The DEX volumes are super impressive, actually. Currently like smashing every other chain and coming up very fast on Solana, as you can see from this graphic here. So very impressive. Like already flipped Base in DEX volumes, flipped Ethereum in DEX volumes, flipped BSC in DEX volumes. So coming up quick on Solana. So a very impressive start by Robinhood. I did a little bit of a deep dive on this in one of my past live streams, but I want to go a little bit deeper now because things have been heating up and there's a little bit like hate coming from the Base crew, regular Base community, hate on Robinhood chain. Actually, a lot of like popular influencers and stuff like that starting to get active on Robinhood chain, but like a little bit of hate starting to boil up around Base and their lack of support over their community. At least this is what's been showing up in my feed quite a bit. So I just want to dive deep into this a little bit. Like the DEX volume has been super impressive. This has been mainly driven by meme coin hype, which is also what has been mainly driving Solana. So there's definitely questions around like, is this sustainable? How sustainable is this? Because meme coins in general, they've had their seasons, but once the volume dries up on these meme coins and everyone starts to go out the sell door, the volume dries up very fast, and it's been a little bit of a extractive space, to say the least. So very skeptical of meme coins in general. I just don't think that they have much intrinsic value. I've talked about it quite a bit. You should treat them like lottery tickets. Maybe you get lucky on a few of them, but it's definitely not something to be putting like dollar cost averaging into or trying to invest in over the long term. And I think that has been Base's philosophy also, at least as of late. So dig on this a little bit further. So since launch, Robinhood Chain has now attracted over $290 million in stable coins. That's 134 million in DeFi TVL. So that's actual like bridged volume. I think it's a little bit higher now. So originally when they launched, they were going after the RWA market, but then this whole Cash Cat thing happened. And for those that don't know, Cash Cat has been like the most popular meme coin that has launched on the Robinhood chain. It was derived from, I think someone from the Robinhood team mentioned that originally they wanted to call Robinhood, I don't know if it was Robinhood the wallet or Robinhood the app or Robinhood the chain, but the original name for it was Cash Cat. So that's where this meme coin derived from, at least the name for it. Apparently they've got some receipts on how Robinhood used to talk about Cash Cat as a name, but then they switched to Robinhood. So this is where it came from. And it just exploded in value, as you can see from the chart here, up to highs, $230 million fully diluted, which is pretty wild. Like up there with Ansem, I think has been like 450 million, which is like the biggest meme coin on Solana, and this is the biggest one on Robinhood. And so I think a lot of the activity has been driven mainly by meme coins, at least thus far. But when you actually dig into like L2Beat here, just to dig into this a little bit, so L2Beat shows that they have about 400 million now in TVL. That's like total value secured. However, a lot of that, if you go into the details here, a lot of that is natively minted. So like what's actually been bridged is about, let's see, canonically bridged is about 146 million, externally bridged 100 million. So you could say like almost 250 million of that now is bridged onto the Robinhood chain. So that's actual value from other places that's come to Robinhood chain, which is a very impressive start. So you have to take the 600 million number with a little bit of a grain of salt, because that's natively minted. So what that means is like ERC20 tokens or whatever that have launched on the chain that don't necessarily, like if you like Cashcat, for example. So of that 350 million that is natively minted, like 150, whatever Cashcat's at right now, around 150 million of that is just Cashcat alone, right? So it's hard to say that that's actually $150 million worth of value, because as soon as like some of the largest holders of the Cashcat token started to sell, and that the value would crash very fast, as happens with a lot of different meme coins. Once big wallets start selling, the value actually just collapses, and it's very actually hard to get any value out of that, except for being very early in these things. So, but anyways, regardless of that, very impressive start from Robinhood Chain. Digging in a little bit more on L2B tier, you can see where these flows are actually coming from right now. So as you can see, this is the part that's a little bit more confusing for me, because it still shows the main value is coming from Ethereum. As you can see from these, shout out L2B, like great flow charts that they provide. Very little action coming from Base. Like you can see a little bit going to Robinhood Chain from Base, a little bit coming back out from Robinhood Chain back to Base. Same with Solana, a little bit more activity between Robinhood Chain and Solana, which tells me that like a lot of people chasing the meme coin hype. A lot of that is also Pump Fun. So Pump Fun announced, see if I can find it here. It's somewhere. So Pump Fun, which is like the main platform for Solana where meme coins are launched, is now available for Robinhood Chain. Also, you can trade Robinhood Chain tokens available on Pump Fun, and they no bridging required. They just like you can trade seamlessly with Sol. So I guess they're acting as like a market maker in between. I'm not sure if there's any trust, but I would assume that there's some trust involved there. I don't know the exact mechanism, but it seems like they're just market making this and offering it to you. Hopefully it's non-custodial, but or else that it just adds even more additional risk for the users that are doing that. But my point is that I think that a lot of this that's happening on L2B tier between Robinhood Chain and Solana, a lot of this is probably meme coin activity between Pump Fun. So they're probably making those, yes, like arbitrages or market making activity to offer those tokens on Pump Fun. The main activity, again, is from Ethereum and Robinhood Chain, which tells me that a lot of this is like just like larger capital. Because in general, the Ethereum capital is mainly institutional capital, larger capital allocators like market makers. So a lot of the biggest capital is still coming from larger players. There's not a lot of like actual retail flow between Base and Robinhood Chain. You can, if you dig into this on the Virtuals app, you can actually see it in a little bit more detail, but it is changing. So props to Robinhood. Like they've done a very good job on this launch. You can see that the last time we dug into this, there was only like a few tokens that were launched on Robinhood Chain. Like these are actual like projects trying to raise money and like do long-term projects like with roadmaps and stuff like that. Virtuals is a great launch pad for this stuff. And so it's a good indicator of like where this activity is coming from and who's launching and stuff like that. So this is like not meme coins, actual projects. And the last time we dug into this, it was like half and half, like a 50-50 split between Base and Robinhood Chain. But now if you look at the top 24-hour volume, like top projects by 24-hour volume, you can see it's just completely dominated by Robinhood Chain, like completely, like top 10 at least here is all Robinhood Chain tokens. So Robinhood Chain taking over, and justifiably, this is eating up a lot of attention and taking a lot of, at least what you see from like the influencer space. Just as an example here, I know Cryptic Tits here, he's a long-term OG on Base. Like I won't go into all the details here, but he basically wrote an open letter here to Brian and Jesse from Base, just saying that like, hey, genuinely want to like understand like what your plan is here, because you're basically like losing market share to Robinhood Chain and like what is your plan for growth here? I agree with the sentiment. It is a little bit frustrating, like as a base builder myself and a longtime supporter of base. Like it would be nice if they supported the more long tail of builders that have been on their chain and supported them for a long time. They've made a few bad moves over the years. They have tried to correct this, and Brian Armstrong has addressed it also. So I want to give them their credit here. Let me find Brian's tweet here. Like here's another critical post, a little bit of like talking about Robinhood Chain versus Base once again. And Brian actually did respond to this, saying here, this is the key part, steering users towards positive sum crypto use case, liquidity, users, customers, and the best moat. So basically he's implying that they're not going to support like meme coins. Essentially, they're trying to differentiate themselves from Robinhood here, whereas like Vladi has leaned into the whole meme coin hype, and it's yet to be seen if that's going to be extractive and bad for the long term, or if it's a good enough way to kickstart the chain. As you can see, like the timing couldn't have been better, because like this stuff was really starting to kick off on Solana, like with Ansem, and then Robinhood Chain launched, and then they capitalized on that meme coin hype that was happening on Solana, and like meme coins like really started to kick off. And this has been like a very good Kickstarter for the Robinhood Chain. Like the DEX volumes, like I said, have been just like really well. Like they've, like I said, flipped Ethereum, flipped Base, and they're on their way to potentially flipping Solana here. So it has worked out for them. But I think I agree with, bring that tweet back up here. I think I agree with this sentiment. Like it's, if the volumes are coming solely from this like meme coin hype, like long term, this could affect like long term trust in their chain over time. If a lot of people's like first impression of Robinhood Chain is like meme coins, and then 95% of these users end up like losing their shirts basically, because 95% of meme coin traders, or traders in general, lose money and lose their shirts. So I don't know, it's a good way to bootstrap your DEX volumes, but like long term, is it going to be more like extractive and leave a bad taste in the mouth of new users? Yet to be seen. And I guess this is the point I wanted to make also around like holder numbers. The holder numbers are starting to grow, as you can see from like the top projects here on virtuals. Like you're seeing now Robinhood projects launch with around like 3,500 holders, like 2,200 in Vena, 1,500 here in Raxel, but still like relatively like low holder numbers, like on average. If you compare that to top projects on Base, for example, like Caspius, 3,300 holders, Ribita, Tibber, like 73,000 holders. But then you see like ones like Prize Fight here, 21,000 holders. Some of this can be manipulated. You can airdrop and just like really get your holder numbers up. So it's hard to say for sure, but like a lot of like big projects on Base are in the tens of thousands of holder numbers, like Repo here, like a project on Base, 23,000 holders, Wire, 13,000 holders. And whereas like I said, the top project on Base here, 3,500 holders. So they're not quite there yet in terms of like retail attention. I know that X and Twitter, whatever you want to call it, makes it seem like all the attention is on Robinhood Chain right now. Everybody's there. Like the algorithms do a very good job of making you FOMO and making you think that, hey, this is like everything that's happening right now and there's no attention anywhere else, or nothing happening anywhere else. The numbers don't quite show that like everybody has switched over to Robinhood Chain just yet. Again, very impressive start. I want to say again, they've done a very good job, but it doesn't look like they've got like the tens of thousands of like retail users like fully switched over to Robinhood Chain just yet. With the momentum, that could easily happen over time. I think that this is the reason why these debates are starting to pop up on X around like, hey, Base versus Robinhood, and like what is Base going to do to try to capture their user base and like provide value so that users stay on Base long term. I still think that Base has the opportunity, if they do it right, to like support very like quality builders, support quality projects that are building for the long term, and try to get as many of those to launch as possible. Shout out to Virtuals. They've done a great job of providing that home for people to launch projects, launch quality projects, raise over the long term. Of course, any launch pad is going to attract like some scammers and some people that are just not in it for the long term and just trying to make a short term buck. That's inevitable. You can't, like, if you make open platforms, you can't like block those people out. Those people are going to exist also. But I think that overall Virtual's done a very great job of attracting quality projects, and I think that there's a lot of signal within the Virtual's ecosystem anyway. We're definitely in the middle of a bear market right now, so it's hard to see like the full result of this over the long term. We'll see once the actual attention comes back to crypto, but I think Virtuals has done a very good job of like being a solid launch pad, and now they're fully capitalizing on Robinhood Chain also, and there's been like some hints that like somehow maybe they can combine Robinhood Chain and Base, and like maybe make Base projects accessible to Robinhood also. Let's see what happens over the long term here, but this is a critical moment, I guess, is my point for Base and for Robinhood Chain. What do you want your identity to be? Robinhood Chain is right now leaning into the meme coin hype. Yet to see if that's going to be a net benefit over the long term, but it has been a good way to bootstrap their DEX volumes, that's for sure. And now it's critical for Base to really set their identity and figure out like, hey, what is our moat going to be? And Brian hinted, like I said in his tweet there, that they want that to be like more of the quality projects that bring value over time. So let's see. I wish the best to Base. I wish the best to Robinhood Chain. It's all great for Ethereum. So I think my personal opinion, though, is that one or two chains is probably going to eat up a majority of all the volume. Probably like one. Like if you just follow the power laws, like one chain is probably going to consume like 80% of all the attention and hype over the long term. Yet to be seen who that's going to be. Robinhood Chain definitely coming up strong and has a real opportunity here, because they also have like the main Robinhood app, which has millions of retail users already. So they have like a very strong opportunity here. But Base has done some very impressive things over the past couple of years and built up a very solid ecosystem. So they also definitely have a shot at it. So let's see. And then Solana's definitely got their moat with the more degenerate crowd, it seems. They're trying to go after more institutional also, yet to see how that all plays out. But they seem to be the home for meme coins and degen behavior. So right now, those are the three places where everyone's eating up all the attention. And then Ethereum is the home for institutional capital, large capital allocators who want that security, who want a chain that's never gone down. So everyone's like figuring out their identity at this point. We're still early. We still got a lot of ways to go in the crypto space. We'll see how this all plays out, but I would say like the 3-4 major players to keep an eye on right now. Everyone's fighting over their identity at this point, and we'll see where it goes. The next big catalyst that I would say for Base here, something that they have hinted at, if you go to their main page here, you can see they say Base is beginning to explore a networks token. So I think this is going to be the inevitable next step for Base. This is going to be if they launch a network token, it sounds like they probably are going to launch a big network token, like that Base token. Yet to be seen like what this all entails, but I think this is the next big catalyst for Base. I think that Robinhood Chain still has some work to do as far as like bringing RWAs onto the chain, and maybe that's their moat and that's their identity. Yet to be seen what Base's identity is, but they definitely have the opportunity by launching a network token to capture like all the eyeballs back to them. So I think this is the next big catalyst to watch. I wouldn't be so quick to jump and make another chain your sole identity if Base has been has been your identity thus far, because I have a feeling if like once this network token is actually announced, there's going to be a lot of eyeballs coming back to Base, because people are going to want to farm that. People are going to want to trade and get activity going on Base in order to get a potential airdrop for the Base token. And if design this network token correctly with the right incentives and do an airdrop to loyal users in a good way, this could be a huge catalyst for the Base chain. So exciting times ahead. Let's see what happens. But in other news, another big story that just dropped this morning is Michael Saylor. Michael Saylor back in the news again. He just announced that he sold 4.82 million shares of Master for $466 million. So this is a big sell. This knocked his cash reserves up to $3 billion now, which, according to my calculations, is about 2 years worth of dividend payments for STRC, which is pretty substantial. Like this, in my opinion, this is the benchmark that everyone has been looking to take away this uncertainty that has been in the markets around Michael Saylor and strategy and everything. Because if you play out the 4-year cycles, which have been pretty consistent over, not even pretty consistent, completely consistent over the past, 3-4 cycles now, or however long crypto and Bitcoin has existed, it's been 4-year cycles to a T. So if you play that out, the next big bull market would be in 2028, which means that like we would be bottoming out sometime this year, starting to rise again, and 2027 would be a bull market, like the start of a bull market, and then 2028 would be when Bitcoin like really goes and blows off again. So basically, where we are right now, Michael Saylor would need about 2 years, which would be a good benchmark to make it like fully through this cycle. So if he has 2 years worth of cash reserves, he should be able to fight any like FUD or criticisms and make all the dividend payments that he needs to over the next 2 years to capture the rest of the cycle. So I think he's pretty close to this mark now. He's got $3 billion in cash reserves, but I guess the only remaining uncertainty that is in the markets right now is around, I think he has about $1 billion worth of authorization for Bitcoin that he is authorized to sell, which was announced a couple weeks ago or a week ago. So I guess there's a little bit of uncertainty still around, hey, is he going to sell another $1 billion worth of Bitcoin anytime soon? Like I said, markets hate uncertainty, and just having that hangover, it keeps people on the sidelines and want to wait for lower prices or more certainty before they want to enter the markets with any dry powder. So let's see. I do think, though, like we are reaching the end point here with Michael Saylor. You can use, what I tend to do is use STRC, which, let me pull this up here. STRC, which is his preferred shares. This is the one where he has to pay the most amount of dividends on. So if you use this as like a confidence indicator, which I think is a good way to do it. As you can see, like confidence was just south, and he had this huge sell-off here, which hit a low of around 71 on June 26th. So for the past couple of weeks now, we've came back pretty strong since then. Like I said, you can use this as a confidence indicator. You can see right now, this is starting to try to get back into an uptrend here. Looks like it wants to like push a little bit higher here. So let's see if he can get that back to peg, which for these preferred shares is $100. That would mean that the uncertainty is basically gone from this whole Michael Saylor drama. So let's see, he's not there yet, but he's definitely calmed a lot of the uncertainty. So as you can see, it's back up to 87 now. So on its way back up to 100. Let's see what it's going to take. Maybe a little bit more Bitcoin selling, maybe a little bit more cash reserves. I don't know, but it's heading in the right direction. So a lot of this uncertainty going away around Michael Saylor, which is nice to see. The other big thing in the news right now is Iran and Trump back at it. Fun to see. It makes you feel like you're going a little bit crazy because this has been just back and forth for so long. Like, will they, won't they? What's happening here? President Trump now says that the US is taking over the Strait of Hormuz. So who knows? This has been back and forth for too long, and hopefully we can get this drama behind us also, because this is just creating, again, a lot of uncertainty in the markets, and markets hate uncertainty. So the main reason that this needs to get sorted out, so everything that's happening in the background, is inflation has started to tick up a little bit again, and markets again hate uncertainty. And if inflation keeps ticking up, who knows what's going to happen with the Federal Reserve, and is the Federal Reserve going to start raising interest rates again to try to calm inflation back down? So this is the uncertainty that has been created from this situation. The reason inflation is ticking up because of this is because this Strait of Hormuz is what controls a majority of the oil supply that moves east and west here. And with it blocked, it's making oil prices skyrocket. So, and for those that don't know, like if you look at the CPI, which is the indicator for inflation, you can see that the vast majority of what is driving inflation right now is energy. So this is what the problem is currently. So if you pull this up, so this is the consumer price index over time, and if you zoom in on this a little bit, you can see that there is this like tick up in inflation a little bit. So this is scaring people, and these tick ups do happen. Again, the main driver of this is because of energy and oil prices skyrocketing because of this US-Iran situation. So it's yet to be seen if this is going to be something that actual drags up like core inflation or not. A lot of times this, like back here, you can get like these like big energy spikes or whatever that cause inflation to come up. And then it actually like never ends up like affecting the core inflation rate too much. So let's see, like sometimes it can be a leading indicator. Sometimes it's just like a chop out that's not sustainable. So it's yet to be seen what's going to happen there. But that's another thing that's causing a lot of uncertainty in the markets right now. And we'll see how this all turns out. That's what I'm watching right now. The other thing which I thought was interesting for those that on the AI front, on the AI side of stuff, I talked a little bit about Fable 5.1. So they just shared, so there's a little bit of a scoop that Fable 5.1 is coming out possibly in the next coming weeks here, which is pretty exciting. Fable has been like a huge hit so far. Fable 5.0, that is. Let me pull up. And there's a little bit of a war going on between OpenAI and Claude and Anthropic right now, because OpenAI just released ChatGPT 5.6, and it's gone over very well. It's a very like Fable-like model. So Claude in turn has had to like continually extend Fable 5 access for all these paid plans, because ChatGPT 6 or 5.6 is available through the Anthropic paid plans, and people just don't want to pay for this stuff through API alone because it's incredibly expensive. For those that don't know, like if you, like I've used the API and stuff like that for my project Charles, it gets incredibly expensive. It's very easy to rack up thousands of dollars in a month using these API credits, especially with these very highly capable models like Fable 5 and ChatGPT 5.6. These are being heavily subsidized by OpenAI and Anthropic. When you pay for your $200 monthly subscription, that barely covers any of the cost of these actual tokens. If you're like fully maxing out your subscription plan, you're probably spending like thousands of dollars a month in tokens, and Anthropic and OpenAI are completely subsidizing this. So because Anthropic and OpenAI both want to go public eventually, they have to get their costs under control. They can't subsidize this stuff forever. So Anthropic has been trying to take Fable 5 off of the paid plan, but because of this competition with OpenAI and ChatGPT 5.6 now, they basically had to extend this out. It's now extended out through July 19th. So I have a little bit of a prediction to make around this. I feel like if Fable 5.1 is just around the corner now, the mistake that they made with Fable 5 was they gave access to the paid subscribers to Fable 5, and now it's very hard to take that away, especially with their competition offering comparable models under their paid subscriptions. So I have a feeling if Fable 5.1 is just around the corner, that they'll probably release Fable 5.1 with API access only, and they'll probably extend Fable 5 access to the paid plans indefinitely, like forever, basically. I think that'll be the way that they resolve this over the long term. Here is everyone on the paid subscription models will be one model behind. So you'll have Fable 5 access continued support through your paid subscription, and they'll subsidize that. But Fable 5.1 will be API only. I have a feeling that's what they're going to do, but then they have to deal with OpenAI and their competition also, because like OpenAI already announced that they are going to delay their IPO. They say because of market conditions and stuff like that. But if I had to guess, it's probably because they want to fight this war with Anthropic, and it's a war over user adoption at this point. So they also, through this scoop here, announced that GPT-6 is going to be the next model that they have. Like 5.6 now is going to be the final model of the 5.x series, and GPT-6 is around the corner. So it sounds like if they get that out in August also in the coming weeks, that's going to be the main competition against Fable 5.1. So I don't know how Anthropic's going to handle that. Like I said, my prediction is that Fable 5.1 is going to be API only, and Fable 5 will have continued support through the paid subscriptions. But then if GPT-6 comes out and it's available through paid subscriptions, that could be a problem for Anthropic and could steal a lot of their paid subscribers over. So who knows how they're going to handle this battle over the long term. Maybe they agree that maybe GPT-6 is API only also, and basically everyone on the paid models or paid subscriptions just ends up being one model behind. So they stay on 5.6 while GPT-6 is API only also. I could see that playing out also, but we'll see. I don't know how they're fully going to handle that situation moving forward, but it's pretty clear now that there's going to be a little bit of a ladder or a little bit of a divide starting to happen between like what paid subscribers you're going to get and what new models and the capabilities actually are. It feels like you're going to have to really start paying for the best models, and by paying through API for like the actual token usage. So I think that's going to start to heat up, and that's going to give a lot more ground to open source models to catch up. Like I've been using Venice now. I definitely, for those that haven't tried it yet, Venice AI, good way to protect all of your data. Highly recommend. I've been using Venice AI with the new GLM 5.2 model, which is the most highly capable open source model out there right now, in my opinion. Very similar capabilities up there, very close to like, I would say very similar to like Opus 4.8. Like it's very high, like a very capable model, and you can get like through a Venice Pro subscription, you can get like basically unlimited access to these like open source models, any open source model that you want. And the open source models are like not very far behind. So I definitely highly recommend. They're probably only like 3 months behind. So I would say 95% of like the stuff that I need to like be searching for or using, even like through my AI agents, like 95% of the tasks can easily be done through GLM 5.2. It's a very highly capable model. And then you can just like save your premium usage like for the very complicated hard tasks and use like the top frontier models for that, like Fable 5 and GPT 5.6. At least this way you get to keep like most of your data private, and you don't have it going through to these like OpenAI and Anthropic that can just completely read your chat history. Everything that you write to your AI is completely like open for them to see, which is sad. So I'm a big proponent of human freedoms, human privacy, and Venice has like a very good product. So definitely highly recommend. That is basically all the big news that's out this Monday morning. So happy to keep you guys informed on everything. I always like to look at this rainbow chart every day just to see like where we're at in the cycle, just to close things out here. Good reminder, we are in fire sale territory still. So I think we're nearing the bottom of the bear market here. I think the fourth quarter of 2026 here is going to be an up quarter. Just my prediction, not financial advice or anything like that, but in general, these levels that we've been at have been complete fire sale territory and very good moments to be dollar cost averaging into quality projects. So like now's the time to pull your attention back to crypto. I think there's a lot of good stuff coming ahead, and these are like fire sale prices. So I think Q4 is bullish, especially with the midterms coming up. Like politicians are going to be making promises that they can't pay. They're going to be offering free money to everybody and trying to get as many voters as possible. And the way that they pay for this is through debt and through money printing. So that added liquidity is also always great for markets. So I expect Q4 to be bullish. I think we put in a bottom over the summer here in the crypto markets, and 2027, 2028 should be very good years for pulling attention back to crypto. So now's the time that quality projects should be building and planning for the future, because I think the next 2 years we really bring a lot of attention back to crypto. Attention moves very fast, and right now a lot of it has been on AI and like the whole AI like build out and everything like that, but attention moves fast, liquidity moves fast. I think it's just a matter of time before this comes back to crypto. So pay attention. Now it's time to pay attention, I guess is my point. So thanks for paying attention to me. Thanks for tuning in, and I'll be back maybe tomorrow or Wednesday as soon as we have more news to talk about it and keep you informed. Peace out, everyone.